Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be doing a guide on how to improve your win rate using the OF zone. And I will be doing this breakdown with a beautiful trade on EURUSD, which I sent to the team as a trade setup. So as you guys can see here on the screen right now, this was the before, which was the EURUSD chart on the 1 hour time frame. I had sent out the zone, sent out my prediction and analysis, and yeah, everything was sent through. And you guys can see the zone was a part of my weekly breakdown that I sent out to the team every single week. And yeah, price came up to the zone, reacted from it, and it ran for over 15 hours. So if you guys want to get into the trade setups, the weekly setups, some signals, and all of the other listed benefits over here with the course, make sure to check out the first link in the description to sign up for the mentorship. Currently, we do have a discount going on for Ramadan, and the price is only £99 one-time fee. So make sure to check that out. The price will be turning to its original price in a couple of days on Wednesday, so the 10th of April. So yeah, guys, make sure to get in on that deal before the price goes back up. But without further ado, let's get right into today's video. Okay, everyone, so let's start off with what exactly are these OF zones. An OF zone is just a simple abbreviation for an order flow zone. And an order flow zone is when we have a scenario where price has previously shown us that we are mitigating in one direction, and therefore the zones which are being mitigated, we can go aggressive with them since it's a high probability chance that price will continue to mitigate in this specific direction, right? And this can be either bullish or bearish, but what we need to see is constant break of structures in the desired direction and constant mitigations of the zones, right? So in this example over here, we can see that we are looking at bearish order flow. Why? Because let's go through the criteria. So we need constant break of structures towards the downside since we are looking at bearish order flow, right? So here we can see a break of structure towards the downside, and then again a break of structure towards the downside, and then again another break of structure towards the downside. This is the first thing that we need to see when looking at pro order flow setups in a bearish market, which is break of structures towards the downside. The next thing we need to see is constant mitigation of supply zones. Why? Because in a bearish market, we want to see the sentiment being strong before we get in, and we know it's strong if we are seeing constant mitigations of supply zones, because this will tell us that price is mitigating downwards and the desired move is towards the downside. So as we can see here, we have a supply zone, price mitigates it and then mitigates it successfully. What do I mean by successfully? A successful mitigation is when price breaks structure towards the downside, hence creating bearish structure, right? For example, over here, let's say price did mitigate this zone. So let me quickly clear everything up. So let's say price did actually mitigate this zone, so this move started, and then let's say price did this instead of what we had here. So it failed to break structure, right? And price only dipped for a little bit before ultimately getting rid of the zone. This would be, in my eyes, an unsuccessful mitigation, as we didn't see a move that was significant enough to break structure, possibly telling us that the sentiment might actually be towards the upside. However, in our case, we did see a new break of structure being formed and a new lower low being formed. Therefore, we have a successful mitigation. So in this diagram, we have both successive and consecutive break of structures, and we also have successive and consecutive mitigations of supply zones. In this case, we clearly have an example of bearish order flow. And now the next thing we need to wait for is the next order flow zone to be created. So in this example, this one here is our order flow zone. And once this is created, all you need to see is, do we have a break of structure? Yes. Do we have high volume? Yes. Has price already mitigated it? Well, before this point, there was no mitigations or wicks back into the zone. And then look out for any extra things such as inducement, which will give us more confluences to add to this trade. So inducement, maybe some engineered liquidity resting below the zone, maybe a solid TP of equal lows, or just any other confluences that you can add to the trade. Now, that is basically all an OF zone is. It's very simple, like all of my other concepts. All you need to look out for is this bearish order flow model occurring in your chart. Now, what we're going to do is we're going to take this diagram and we're going to bring it onto the real life charts using that beautiful trade that I took on EURUSD. Okay, everyone, here I am on EURUSD on the 1 hour time frame. What we're going to do is now we're going to start off with the analysis on a completely blank chart, and we're going to go on from there. So the first thing that I did when I was analyzing EURUSD before I went on to the order flow and all that good stuff was analyze to look for any supply zones that I want to be entering from. The first one that caught my eye was the one right over here. Now, this is a 1 hour zone. The stop loss was not big at all, so it was fine to enter aggressively from it in hindsight. And yeah, so everything was good so far. Now, I also noticed there was a zone down here. However, this zone was carrying a bit of liquidity in terms of this sort of trendline liquidity over here. And I was thinking to myself, I would take a confirmation from this level if it does give me a confirmation. However, if it doesn't, then it will just simply be inducement for the zone above. So I did mark up the zone as inducement, but I also marked it up as a confirmation zone as well. So I will also look to see what happens here. Now, let's go back to analyzing this zone over here. First of all, let's go through the basics. Do we have a break of structure? Yes, we have a break of structure right here, as price broke this low, forming a lower low over here. Do we have high volume? Yes, we have high volume, and I will mark that up here all throughout this fair value gap right over here. Now, we've got high volume, we've got break of structure. Price has definitely not yet mitigated this zone. Now, let's see if we can identify this zone as a order flow zone, an OF zone. So what I did was I knocked us down to the 30-minute time frame and I started to analyze. So as you guys can see here, there is a previous zone right about here which price tagged into and caused a down move, right? Let me just get it to my zone. Price tagged into this and it dropped off. So what we can say here is we have our first mitigation. And I'll mark it up with this red dot at the wick, which symbolizes the mitigation of this zone over here, or just this move over here. Now, price then comes back up and it looks as if it mitigates something on the left here, but I'm not going to mark it up because it's not very clear. Then price creates this zone over here and price comes back into it with this wick over here. So that is our second mitigation, right? And again, this mitigation then went off to cause this break of structure. So we have a considerable amount of break of structures, and we have a considerable amount of mitigations. And I'm pretty sure this wick is also mitigating a previous zone all the way back here as well. So that is even more confluence right there, as this becomes our third consecutive mitigation, right? So let me just make this a bit smaller. So we have mitigation 1, 2, and 3, and we have break of structures 1, 2, and 3. So this is successive consecutive break of structures and successful mitigations. So we can clearly see that our high probability OF zone lies over here on the 1 hour time frame, right? So now all we have to do is we have to wait and see whether we're going to see a confirmation from this level. If we don't see a confirmation from this level and price goes through it, then we know we can go aggressive on this, as this was simply inducement. This zone over here was inducement for this one right above, and we have the fair value gap playing into our favor. So let's go through with it and see what happens. Price instantly breaks through our inducement zone, and this is no longer valid, as we did not see any confirmations and price completely blew through it. So what we can do is now enter aggressively from our high probability OF zone. And you know, in terms of targets, you can go all the way down for these equal lows over here, right? There's loads of lows resting and lows resting over there. But if you don't want to go that ambitious, then you can simply go for a reasonable take profit over here at the demand zone and fair value gap. Now, I'll just leave this here, just, for the maximized sort of win. And let's play price. So there you go, price tags this in and instantly starts melting all the way down to our TP. If you TP'd here, you got at 1 to 10. If you TP'd all the way early over here, 1 to 5. If you went over here, 1 to 16. The more RR, the better, right? So guys, that is the simple breakdown of how to use this OF order flow strategy in your real life trading. If you guys enjoyed this video, make sure to leave a like and also subscribe, and I will see you guys in the next one.